Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is Jean Munster, Managing Partner at Loup Ventures. Jean is a well-known tech expert, so we are talking about the outlook for tech stocks today and the Innovator Loup Frontier Tech ETF, ticker symbol Loup. Jean, welcome back on the show.
Great to be back. Thanks, Nina.
So 2020 so far has been a remarkable year for big tech companies. Apple, Microsoft, Amazon, Alphabet, and Facebook, they all have been among the biggest beneficiaries of the pandemic-driven disruptions. And in fact, we had you on the show at the beginning of March when this all started, and you had recommended holding a big tech heavy portfolio. And I think that was a great recommendation because if you look at the performance, essentially all the gains in the S&P 500 index this year have come from the big five. But in the past few days, we have seen some very positive vaccine announcements from Pfizer, Moderna, and AstraZeneca, and there has been some rotation out of big tech into economically sensitive areas of the market. But we know that vaccines' wider distribution is months away. And in the meantime, the virus outbreak continues to worsen. So investors keep coming back to these big tech companies. So talk to us about the outlook for big tech in 2021. Should investors continue to hold or add to their tech positions?
I think that it should be core to investors' holdings. I think that they should maintain their positions. I think if they still have exposure to legacy industries, I would put that as industries like air travel, hotels, things, restaurants. I would recommend that they trim those positions and in that case, maybe add to the tech. What I'm trying to express is that these big tech companies are well positioned for next year. They've had a big run. Those runs historically are not sustainable. So I just think there should be more measured expectations from investors about what to expect. But more broadly, big tech is going to continue to see a benefit. It begs the question of how much of that benefit is priced into shares. And I think if you take, for example, the leaders of the FANG stocks plus Microsoft, take those, I think you'll see that 3 or 4 of them are going to be in a great position for next year. And I think 2 of them probably are not going to be in as good of a position. So I do think there needs to be some discretion. It's kind of big tech across the board worked for us during the pandemic. I think there needs to be more discretion, and there's going to be a fracturing of FANG we expect next year.
Okay, what about the political environment? How will the outcome of runoff elections in Georgia, will that help? Because that will determine the control of the Senate. And we know that mega cap tech stocks had rallied initially after elections because it appeared that we will have a Biden presidency and a split Congress. Do you think there is greater regulatory risk for these big tech companies if the Senate flips blue?
I think the answer is no. I don't think it changes the overall risk of regulation. I think there are, within FANG and Microsoft, there are companies that are more at risk and safer, if you will. So I think that there is some distinction between regulatory risk and the impact on some of these companies' fundamentals. I think there's some companies that will get a regulatory boost, and specifically Tesla under a Biden administration, and the stock has been reflecting some of that more recently. Obviously, the addition to the S&P is another piece of it, but I see that as something that is an incremental regulatory positive. Not very often we talk about regulatory positives, but thankfully, if you're in the EV business, electric vehicle business, that is likely going to be the case over the next several years for you.
So let's talk about some stocks because you mentioned discretion and you just mentioned Tesla, which is arguably the hottest stock on the market. And as you mentioned, Tesla's inclusion in the S&P 500 has sent stock soaring again. It is trading close to all-time highs now again, and it is up about 430% or more than 430% this year. Do you think there's more upside to Tesla? And I should add that you have been bullish on Tesla for a long time.
I think there is more upside if you take kind of a 2 to 5 year approach. If you have an approach of just owning things or trading around stocks for the next 6 to 12 months, it's difficult. It's something to be, I would caution trying to trade the stock. It's difficult to predict the trading. One view that, or one piece, an important piece is that in terms of our view of why this is still, there's still upside here, is what ultimately is their addressable market? How big of a business can this be? And to put it in perspective, Tesla right now is just under a $500 billion market cap. So it's a big company, but the size of the markets that they're operating in, whether it's cars or energy storage and energy capture, and then on top of that, they'll be entering new markets. They'll be entering insurance, autonomy, robo-taxi fleets. They will likely get into the HVAC business. Fascinating about HVAC. And turns out that for you to get your home off the grid, basically disconnected from your utility company, from your electric utility company, and you put solar panels on your roof, for you to actually do that, the biggest problem is that the heating and cooling systems take up so much energy. And so that's an area that seems boring, but is a juicy opportunity for Tesla to apply technologies they've already created around motors with the car and filtration systems in the car, apply that same tech into an HVAC system that can be much more efficient and ultimately allow the advancement of renewable energy. People get off the grid. So those are examples of ultimately that this can be just a much bigger business. And specifically is their car business alone in 10 years. Now, this is a long ways away. They could have a $700 billion car business annually. Again, much bigger than their current market cap today.
Another stock, big tech stock, which you have been very bullish on is Apple. And in fact, you had predicted that Apple will be the best performing FANG stock in 2020. And it is almost the best performing FANG stock. It has gained almost 60% this year. Only Amazon is slightly ahead with a gain of about 63%. And Apple has launched a number of new products recently. They reduced App Store commissions for small developers. So what does all that mean for Apple? Do you think investors should continue to add Apple or hold Apple?
I think they should. And we view this as probably one of the core positions. It's because there is the cash flow that they have creates some stability with the earnings multiple. But more importantly is what they're riding on, the opportunity they have to really empower this digital transformation. And everything that we've talked about with the pandemic, it has essentially accelerated some trends that we knew were coming over the next five years. They've just moved them all into 2020. And what that means for somebody like Apple is they have tools, iPads, Macs, phones, services that help people entertain themselves during things like this. They have those products that really empower this digital transformation. And I think that means that this company should have a line of sight to 10+% revenue growth over the next couple of years. And the revenue growth had been below that over the last couple of years. So you have this kind of acceleration in revenue that is sustainable beyond the pandemic. And I'm optimistic that a year from now, the world's going to be in a better place based on the vaccine. I'm optimistic about that, and I still think that Apple's going to enjoy, even beyond us getting to that point, I think Apple will enjoy this digital transformation that they're empowering that should be good for their top-line revenue, and I think the shares will be rewarded because of it.
So apart from Apple, which other big tech stocks you like most, which have the best potential in 2021?
I think Amazon still has great potential. I feel that what they're doing around infrastructure and taking their delivery and making it faster, we know about that. But we anticipate that they're going to get more into something that we call the anticipation economy, which is better predicting our needs. And they do that through some recommendations, but they can start to supply some of those. For example, if this may sound crazy, but for example, if you have an Echo and it notices that you're coughing a certain amount of time or sneezing a certain amount of time, they may send you cough medicine. There's opportunities that Amazon can do to help kind of empower this anticipation economy. It's the next phase, I think, of the internet is anticipation. And so they're in a great place because of that. I think Google, based on their other bets, is in a great place. So ultimately, that's an opportunity that is not fully reflected in the shares. It's everything from their autonomous driving to their longevity company, just help people to live well. They have a flying taxi company, and they have an AI company called DeepMind. There's a lot of exciting things going on in Google that investors generally don't talk about that I think are going to become more part of the conversation next year. And then there's a whole another segment. We're still trying to figure out where to best apply our work here, but is what's going to happen around tech and real estate. And you have companies like Redfin and Zillow and Open Doors going to go public, basically trying to really make the buying and selling of a home, reduce some of the friction on that. It's people's biggest asset. And there's a lot of uncertainty that goes around it. And those companies are trying to make that more seamless. It's a massive addressable market. And I think you're going to hear over the next 5 years more from those three companies. Zillow kind of rules the roost. Great, crazy statistic here is almost everyone in the U.S., it's about 240 million people in the U.S., of the ages that you would be looking for a home, looking for a place to rent, either one of those, almost every one of those checks Zillow at least once a month. So their monthly active users are about 240 million. Staggering numbers of engagement there. So I just mentioned that. Those are kind of three stories. I do, as an aside, disclose that I do own Zillow shares because I believe in this kind of longer term. It's not a recommendation for someone to own it, but I just need to disclose that. So I think that the real estate tech market is an exciting opportunity over the next 5-10 years.
Definitely very exciting. And let's talk about your ETF now. It is, again, the Innovator Loup Frontier Tech ETF, ticker symbol LOUP, Loup, easy to remember. And it invests in some of those exciting new technologies, including artificial intelligence, consumer perception, robotics, autonomous vehicles, virtual reality, augmented reality. And I noticed the performance, it has done really well this year. It's up more than 55% this year. Talk to us a little bit more about this ETF and what it aims to do.
So we're aiming to find less or companies that aren't as well known. These are not the large cap tech stocks that we were talking about earlier. These are less known companies that are empowering those themes that you mentioned. It's everything around artificial intelligence to computer perception. That's the ability of vehicles to drive by themselves. There's electrification as part of it, robotics, the future of retail. These are all themes. Basically, this shift, this digital transformation I was talking about earlier, there's the big companies that go into it, and then there is some smaller companies, smaller market caps that are pursuing that. And so that is one. Some of our companies that have been in the ETF have grown to a point that they become bigger companies, for example, like NVIDIA and Tesla. But that's the core theme, the core objective here is really to find less known names that are pioneering this digital transformation.
Yeah, I remember that Tesla used to be the top holding in the portfolio a few months back. So I think these companies which have the potential to become next Tesla or next NVIDIA, right?
Correct. That's exactly what we're shooting for.
Okay. So looking at the top holdings, I see Pinterest, Visteon, Exxon, Yaskawa Electric, Baidu, because this holds companies, not only US companies, but other developed and emerging market companies too. Snap is also there among the top holdings. So could you talk a little bit about some of the top holdings in this ETF that you really like?
Before I do that, I just want to lay some groundwork to how those companies are selected. We have a universe of companies that are about 50 And then from that, we have a set of rules that determine which companies actually make it into the index itself. And the rules are based on it basically gives us discipline around revenue growth. That's our fundamental theme, is that these companies should be in high growth markets. And if they're not growing, we don't want to hear excuses. We will not give them the benefit of the doubt. You either are growing or you're not an innovative company. And so it's a pretty strict rules that get us there. And then, as you talked about, some of our top holdings. There's two that I wanted to mention because some people may know them. We talked about less known names, but one that many people may know is Baidu. They are the Google of China, and what their core business, of course, is search, and they're doing other things too. And one of the reasons why it is in our Loup index is that what they're doing around autonomy, we think that they have an opportunity to be a top 3 player in autonomous vehicles. They have their an autonomous vehicles division, very similar to Google and Waymo. But just the part that is so exciting for us is that China is going to be, that autonomous market is going to be won by a local company, and Baidu is the leader in that. And so I think that is not fully appreciated by investors. Another company, Snap, and this, of course, at first blush would seem like a social network for people in their teens and early 20s, and that is their core business today. But that's not the reason why it's in the index. It's in there because they've got a great core business, but ultimately this company has the power around, or a vision around, augmented reality. And AR is something that is talked a lot about in the tech circles, but in investing circles, I think many investors believe that it will never play out to the hope. And we disagree. We think AR is going to be massive, and we think it's going to fundamentally change how humans interact with each other. And I think Snapchat is a great way to invest in that. Specifically, they view themselves as a camera company. That's how they describe themselves in their filings, as a camera company, not some social network. And so I think that the ability for Snap to really be a strong use case around augmented reality, the future of how humans will communicate and play, I think is a powerful opportunity for this to be a much bigger company.
Excellent. That's all we have time for today. Gene, thanks again for joining us.
Thanks, Nina. Look forward to doing it again soon.
Thanks for listening. If you want to learn more about these stocks and the Loup ETF, please visit Zacks.com. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. And make sure to subscribe so that you do not miss any episode. If you have any comments or questions, please email podcast@Zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute, an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.